Yeah, this is Umesh Raut here from PhillipCapital. I cover capital goods and defense sector over here. We recently came out with a thematic note on defense sector. We believe sector has done really well in last 2 years. It has outperformed overall market in terms of stock returns. However, we believe outperformance will continue going forward as well. We have highlighted key points on the sector side where we believe it is not yet played out and that will benefit overall sector as well as respective companies. We believe there is an opportunity of about $110 billion in terms of ordering pipeline in next 6 to 8 years. It is largely driven by opportunity on the fighter jets, helicopters, missiles, naval ships, which is kind of coming up in terms of new ordering pipeline in next 6 to 8 years. Out of the 110 billion opportunity, I believe Air Force would be contributing about $44 billion kind of opportunity, while Indian Navy would be contributing about closer to 40 billion kind of opportunity, while remaining about 24 billion kind of opportunity would be dominated by missile and other equipments which are used in the Indian Armed Forces. We also believe that in terms of pipeline, there are programs which are homegrown in nature. So, for example, light combat aircraft Mark II is now into the development phase. We expect that to enter into the production phase by about FY27. That offers about 1 lakh crore ordering opportunity for company like Hindustan Aeronautics. Beyond this, we are very much positive on overall helicopter manufacturing space, which is largely dominated by two programs. One light combat helicopter, other light utility helicopter. Both of these programs combining would be offering about 45,000 crore kind of ordering opportunity for Hindustan Aeronautics. While there is a opportunity on the fighter jet engine manufacturing side as well, which is for a platform like ALFP-31 used for Sukhoi 30 fighter jet, while there is one more fighter jet engine which is in the form of RD-33, and combined both these two programs would be offering ordering about opportunity of about closer to 30,000 crore for Hindustan Aeronautics. Apart from this, we believe now India's positioning into the export markets have also kind of improved, and it is largely because of our homegrown technology as well as more overall positioning in terms of bargaining power getting improved from the India's political point of view. So that's where we believe export potential for fighter jets, for light combat helicopters, light utility helicopters, that is kind of increasing. We believe some of the countries like Vietnam, Philippines, even on the Middle East side, Egypt, on the Latin America side, Argentina can get into our product offerings, and that's where export opportunity is there for Hindustan Aeronautics to tap upon in the next few years. Especially on the Indian Navy side, I think most of the programs are from the point of view of adding new capacity into the existing fleet, whether it is in the form of larger warship for a destroyer program, or maybe in the form of frigate, which are more of stealth category carrying weapon systems like BrahMos, or whether it is related to smaller warships like Corvette. So we believe there are four larger programs which are coming up in next few years. One with respect to next generation destroyer worth rupees about 50,000 crore, next generation Corvette which is about 36,000 crore, which was recently approved by Defense Acquisition Council. While there is one more program on the warship side which is in the form of next generation frigate, which is about 43,000 crore. There is one other market program which is with respect to submarine, which is called as a P75I, which is worth rupees about 50,000 crore right now into the bidding stage, where L&T and Mazagon are the qualified partners as of now. We believe there are other vessels also where opportunities is there, but relatively looking at other four things, I think that particular pipeline would be more of to the tune of about 2 to 5,000 odd crore per program, and that's where I think other vessels also offer about closer to 30,000 crore kind of ordering opportunity for Indian shipyards. Especially on the missile side, the larger driver is obviously fleet addition, which is happening on the Navy side as well as on the Air Force side, and then the incremental opportunity which is coming in for missile systems like BrahMos or Astra, which is basically beyond visual range air-to-air missile, or whether it is in the form of missile systems like quick reaction surface-to-air or long-range surface-to-air missile. So basically, this is where I think it is more of a function of fleet addition. At the same time, we are also kind of upgrading our existing missile systems, likes of Akash moving into Akash 1S, which is based on new Seeker technology, and from there on, we can have another upgradation coming up in the form of Akash NG, which might kind of come into the production phase couple of years down the line. So I think missile opportunity is a long drawn opportunity. Basically, it offers contract or program tendering opportunity for players like Bharat Dynamics or Bharat Electronics. At the same time, there are certain countermeasure weapon systems which are also getting more popular, and those are also indigenized into the India. One of which is currently kind of deployed by Bharat Dynamics. While I believe there are more and more countermeasure systems which would be coming up in next few years, and that's where we believe Bharat Dynamics is in a favorable position to get those orders. In terms of, I'll say key on the other two factors of sector note, that is one related to the favorable policies which were launched by the government since last 4 5 years, and I think those policies are kind of now favoring domestic manufacturers. They are putting up import embargo on few certain items. They have released food list on that line. So they have put in about 411 items into the import embargo, and that is happening in a more of a phase-wise manner. But I think ultimate result would be a replacement of about 2 lakh crore kind of ordering from foreign market to domestic market, and that exact shift will play in favor of domestic manufacturers, and that's where we believe domestic manufacturers, especially within that private sector, would benefit immensely out of it. While at the same time, they have also mandated larger defense PSUs to kind of indigenize about 2000 plus items from Indian market instead of having foreign procurement. I think that is also beneficial for DPSUs in terms of having cost saving benefit coming in for them, as well as that will also offer business opportunity for smaller players like Data Pattern, Astra Microwave, Apollo Microsystems. I think talking more on the efficiency side, government has also did a lot of initiatives to improve the efficiency from the defense sector. So they have corporatized 41 ordnance factory boards into 7 new corporates to kind of streamline the processes to improve the efficiency from their internal operations, and to also have a dedicated accountability for the performance. And that's where out of the six out of the 7 corporates, 6 have already reported profits in first half of the year itself. And I think that is where the focus is, to improve efficiencies under the defense sector. At the same time, they are also addressing issues with respect to timelines, whether a timeline of development which is higher generally in the range of about 15 to 20 years, that is kind of now they are planning to reduce it to closer to about 10 12 years for larger programs, and to about 4 to 5 years for smaller programs. And that is essentially happening because of I'll say higher indigenization, incremental R&D spending by larger DPSUs as well as private sector. And third, because India's positioning in terms of global market has improved, so that's where we are getting access to newer technologies through transfer of technology, and that's where I think more and more incremental programs are coming up in a more of a timely manner, and that timeline itself is kind of narrowing down. I think another important third aspect which we have mentioned in the report is with respect to funding for the defense sector. I think that was one of the legacy issue or one of the challenge while working out with new orders, especially which are marquee in nature. So that's where they are kind of now addressing it through Agnipath scheme, where there will be incremental room available to increase the capital part of the defense in a more of a higher way rather than as compared to revenue part. So basically, currently revenue part of the budget is about 73%, while capital part is about 27% only. But that itself is not sufficient enough, and that's why they have launched this Agnipath scheme, which after few years down the line will immensely improve the capital allocation portion from the overall defense budget. In our view, that can go as about 40% by about say FY 2034. That is what we have analyzed in our report. Higher allocation towards capital part, at the same time, more and more indigenization efforts will ultimately drive a domestic defense industry growth to the tune of about 2x of GDP growth, and that's what our assumption is. And within that, because now there is also incremental allocation to private sector, which is capped at about 25% for FY 24, I believe that it will also that itself will again add more lever to private sector, and private sector under the domestic defense can grow about closer to 2.5 to 3x of GDP growth. So overall, we are very much positive on the sector. We have covered companies like Bharat Electronics, Hindustan Aeronautics, Bharat Dynamics, Data Pattern, Solar Industries India, and MTAR Technologies in our report. Looking at current valuations and what they can deliver in terms of earning performance, we are currently favoring companies like Bharat Electronics, Bharat Dynamics, and MTAR. While we believe companies like Hindustan Aeronautics, Solar Industries India, and Data Pattern also offers value to investors. Only point is maybe the upside potential in near term is kind of limited. Talking about Bharat Electronics, I think it is much more favored company from the investors since I'll say the last decade. Continuously, I think it will gain from more and more indigenization taking place in India, as well as more of a diversified offering in defense, non-defense segments, and that's where we believe it can report earning CAGR of about 18% on the base of FY 23 to FY 26, and we are assigning about 25x multiple to Bharat Electronics, largely because of improvement in return ratios since last 2 years, and along with the improvement into the working capital. So I believe 1.35 was the peg ratio for Bharat Electronics, and that will sustain going forward as well. And that's where 25x kind of a P multiple is kind of justifiable for Bharat Electronics. On 25x, definitely we get target price of about closer to 160 rupees, which is roughly about 20% plus kind of upside from current level. In midcap, we prefer Bharat Dynamics, which is more of a function of strong order backlog at the start of FY 24, and then the execution, which will ramp up significantly from FY 25 onwards. Company has a potential to report earning CAGR of more than 40% on the base of FY 23 to FY 26. We believe looking at stronger growth and strong opportunities around missile segment, company should get P multiple of about 25x, and that's what will lead to target price of more than 1500 for Bharat Dynamics. We are currently positive. We believe certain levers are also available which are not yet captured in our estimates, which are in the form of export story for missiles, where they will be getting newer orders from friendly countries. That is not yet fully captured into our numbers. While in small cap, we prefer a name like MTAR, which is much more diversified into five segments. One of them is obviously defense. Other four segments are also looking attractive right now, which are nuclear space, niche fabrication, and basically related to clean energy. So I think company from having a stronger presence into nuclear and space, they have now migrated heavily towards clean energy. But we believe with the possible defense license for MTAR, and then the opening of export sector for MTAR, there will be incremental stronger opportunities for MTAR into the defense sector. So along with clean energy and recovery into the nuclear and space ordering, we expect defense piece to do well for MTAR as well. Stock is relatively, I'll say, overvalued as compared to defense PSUs, but definitely that is purely because of strong earning growth possibility for the company, which is again in the range of about 40% plus. So MTAR currently offers target price of about closer to 2700, and that is our top pick into the small cap. While we like Solar Industries India, we are very much positive on the defense side of the business. We believe from current run rate of about sub 3.5 billion kind of a top line from defense segment, it can reach closer to about 20 billion kind of a top line in next 3 4 years, largely because of programs like Pinaka missile, Brahmok missile systems, and some of these consumable products from the defense sector, which are which are likes of handheld multi-mode grenade, and that's where I think companies receiving orders from export markets as well. So solar industries also looks kind of fairly placed to benefit from the overall defense and nation's story. Apart from that, data pattern has done really well since IPO. It has almost kind of tripled up since IPO price. But we believe currently in near term upside is kind of limited, even though structurally company is on the verge of reporting multiple growth again from current base, but only because of higher valuation, and that is where limited upside is there in near term. So that's why we are currently giving neutral rating on data pattern. So on and all, we believe a sector will continue to kind of perform well. Multiple rating could be another factor which will be there for companies which are consistently delivering on the earnings side, and that's where we are very much positive on overall sector. And we also look forward to new companies which are coming up in the form of IPO, where potential opportunity to generate wealth would be there for the investors. Thank you so much.